Welcome the management of KRBL and thank them for giving us this opportunity. I would now hand over the call to the management for opening remarks. Over to you, gentlemen.
Good afternoon and very warm welcome to all participants. I am sure you must have had an opportunity to see our results. I would now take you through the results for the quarter and the year ended 31st March 2018. First for the quarter ended 31st March 2018, company earned a total revenue of 881.25 crore in the current quarter as against 914.37 crore in the same period last year. The sales during the quarter has been marginally down by 3% as compared to same quarter in the last year. Due to our brand strength and lower cost of material consumed, higher price realization in exports as well as domestic, and other cost control efficiencies, we achieved the EBITDA margin of 23.78% as compared to 19.40% in the same quarter last year. We earned EBITDA of rupees 209.59 crore in this quarter as compared to 177.39 crore in the same period last year. There is an increase of 18% in EBITDA. We made a PBT margin of 18.33% at rupees 161.54 crore as compared to PBT margin of 17.36% at rupees 158.76 crore in the same period last year. However, due to higher provisioning of tax, profit after tax is marginally down to 95.28 crore as compared to 109.32 crore in the same period last year. Now, result for the year ended 31st March 2018. Total revenue for the year ended 31st March 2018 stands at rupees 3,264.06 crore as compared to 3,157.93 crore in the same period last year. There is an increase of 3% in total revenue. The strong brand image, better cost control, we have been able to achieve highest ever EBITDA margin of 24.27% as compared to 20.70% in the same period last year. EBITDA margin increased by 356 basis points at rupees 792.03 crore in this period as against 653.83 crore in the same period last year. We earned highest ever PBT of 655.01 crore for the year ended 31st March 2018 as against 537.56 crore in the same period last year. There is an increase of 305 basis points in the PBT, which stands at 20.07% as compared to 17.03% in the same period last year. PAT also increased by 9% from 399.40 crore for the year ended March 17 to 434.45 crore for the year ended March 2018. EPS has also increased to rupees 18.46 rupees per share as against 16.97 rupees per share in the previous year. I would now request our CMD, Shri Anil Mittalji, to throw light on the industry developments.
Good afternoon to everybody. This year has been a challenging year because the paddy prices were quite high, but luckily KRBL was having the old stock at a very low prices. This year the paddy prices opened up at around 30,000, 31,000, and it went as high as up to 39, 40,000, and today they are at 35,000. And the prices have been going very much up and down. Overall exports have been promising and good, but the challenges this year were from various countries, especially because of trouble in Lebanon area, in Yemen. Saudis were also a little bit involved in the war. Then there has been a problem in Iran and everywhere. In spite of all that, KRBL has done fairly good, as far as the export numbers are concerned. Any particular question, I would love to answer them to the investors.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Puneet Mittal from Global Core Capital. Please go ahead.
Hi, thank you for the opportunity. The question is related not to the current quarter results or current year results. What I wanted to understand is, naturally KRBL is venturing into some new products like chia seeds and quinoa. But the overall rice market in India is quite big, and we do hear that a lot of domestic retail is ramping up in terms of branding stuffs and including spices and rice and everything. So is there a plan for KRBL to really work on a non-basmati segment which is really large in India and maybe overseas as well?
Yeah, we have got a full plan, and this year we have started one India Gate Jeera rice. Jeera rice is a Govind Bhog variety grown in West Bengal, and the consumption in South is too good. We have launched this product last year in July, August in Kerala and received a very good response. Because it is also being sold after aging for 1 year, so my stock levels are quite high today, and I think for the coming time our Jeera rice portfolio will increase. Number 2, we are also doing India Gate Sonam rice. We are doing India Gate from Maharashtra, Kolam rice in the brand of India Gate only, and that is also being received well from the market. So we are expanding our portfolio of non-basmati rice.
And what portion is, I mean, it must be minuscule right now, but what portion do you think the non-basmati rice can ramp up to in next, say, 5 years?
If you talk of the consumption level in India, it is 95 to 5. Hardly 2-3% is basmati, 97% is non-basmati. But to take a pie from the branded segment, the market is quite big. And it is really because there is no big brand in the non-basmati segment. And it is an opportunity for KRBL to tap the market. I hope we can do up to 100,000 ton in next 3-4 years.
All right. That's all from me. Thank you so much.
Thank you. The next question is from the line of Dhruv Saraf from Credent Capital. Please go ahead.
Sir, I just wanted to know that if we have an export opportunity in these non-basmati variants as well, or is it purely domestic based?
No, there is an export opportunity in basmati rice, but we are not concentrating much on it because the margin of profit, the bottom line, the margin of profits are very low. Normally, people are speculating, and the percentage of profit in non-basmati rice is 2%, 3%, 2%, and risks are very high. So our concentration, we only do non-basmati rice to those countries and to those importers who give us a fairly good margin of 6-7%. That is why we are not too much concentrating on non-basmati rice, because nobody is ready to give us that margin of 6-7%.
All right.
Blending also, no? Because we are doing whatever non-basmati also in brands only. We don't do like a commodity. It's so
great bulk. We don't do anything in great bulk.
We are doing in blending.
Okay. And so another point is that one of the major distributors had sold off their stake this quarter. So would it point to a reshuffling of the strategy in those countries, or does it remain status quo?
No, he has sold shares, but he was in need of funds, so he invested the money in 2003.
Yes.
Now in 2018 he wants it to exit, so doesn't matter. It doesn't matter.
So no business point of view over here, right? No business changes. No business changes in that regard, right? I mean, they continue to be your partners. All right.
Yes, he continues to be our partner.
All right. Thank you so much.
Thank you. The next question is from the line of Deepak Jotwani from Qtr4 Ltd. Please go ahead.
Good afternoon, sir, and good afternoon to the entire team at KRBL, and congratulations on being able to sustain good performance over the years, as also exhibited in the current fiscal. So I had a couple of queries. One query, obviously, like you in your opening dialogue was talking about how, the companies benefited from certain low-cost paddy that you were carrying, which was bought a few years back, and that has sort of helped in improvement of the margins in the current fiscal also. Now, speaking of this EBITDA margins of almost 23 to 24%, how do you see this being sustained in the current fiscal?
No, we are looking to maintain these margins of 23, 24. Naturally, I tell you the main reason is we are concentrating only on the branded sale now. If you see, our top line has just increased by 3% because there's a deep cut of non-branded business. Now we are concentrating only on branded business, and our bottom EBITDA margin will go definitely plus 22, 23.
Okay. But, so there's been a substantial increase in the branded business in the current fiscal which has supported the margins, and also in the, that will continue in this year as well?
Actually, we have cut down the business. We have cut down the business of non-branded, so EBITDA has come up.
Okay. And that would be continued in this fiscal as well and going forward as well?
Yeah, exactly.
Okay. And another point was on the inventory side, sir. Closing inventory of almost 2,400 odd crores this year as compared to roughly 2,000 crores that was there last year. Yeah. And I was also following your interview on CNBC wherein, we understood that there's almost 6 lakh tons of inventory, both paddy as well as finished rice. Right. So in the current year scenario where, prices last year, paddy prices shot up significantly and the export market continues to remain volatile as you already spoke about yourself. How do you see any pricing pressure on, the inventory that we already discussed?
Yeah, inventory we are holding is quite low as far as market price is concerned. Even the paddy price have come down from 39 to 35. You will see my average paddy price, Mr. Malhotra.
Is 31,500 rupees.
Our average paddy price is around 31,500.
So 31.5 rupees. As against 35 rupees even today.
Rupees a kilo. And if you see the rice, our total stock is around 331,000 tons.
Right.
The average rate is around 42 rupees 27 paisa.
Yeah.
So if you compare with the market rates, we are quite low, and the benefit will go to the next financial year, definitely.
Okay. And in this current fiscal, what is your outlook on prices in general? Do you expect prices to carry on with the increasing momentum or sustain, or do you see any correction in prices, at least in the second half of this current year?
In the second half of the current year, I don't see any correction. The reason being KRBL deals with the aged rice. And the stock level in the industries are quite low, except KRBL. KRBL holds quite a good inventory because we have to sell our aged rice, and aged rice has a good premium. So we don't foresee in the half quarter, but then the next half quarter prices may go down by 3-4%.
Okay. And H2 basically you expect some correction.
Yeah, because naturally then the paddy would be of the less price also, what we are expecting.
Yeah.
So that 3-4%, if it is the less realization, even the cost price will go down by 5 to 7%. So EBITDA won't be disturbed, what I mean to say.
Okay. And with respect to our volumes in this fiscal, you said that non-branded business, we did not focus much on that, and that is why the top line did not grow beyond 4-5%. So from what I could understand, that we did volumes of roughly around 480,000 metric tons in this fiscal.
Yes.
What was the number for the previous fiscal, sir, FY17?
589. 589. 589. So there is a loss of around 100,000 tons in terms of quantity, and the total 100,000 ton is a non-branded segment.
And whereas in value terms we have increased from 2,903 crore to 2,900.
Just imagine decreasing the value by 100,000 tons quantity, and still we are up the value.
But it will not be attributable to very a significant increase in prices as well, sir.
Significant increase, and naturally the non-branded business is at a very low price. So naturally average of the branded sale is quite high. That is the reason why there is a volume growth, a value growth of 3%, despite decrease in 100,000 tons of quantity.
No.
There is quite a sufficient growth into export quantums as well as revenue. Compared to last year, we did about 169,000 tons this year compared to 153,000 tons, where our quantum went by 10% high and our value went 20% higher. And these numbers are in spite of the fact that if you go through the new accounting system, last year we had around 75 crore worth of realization which went to the fiscal year of 2018, whereas this year it is about 165 crore, around 18,000 tons. So that is also because Ramadan is going and the shipment pressure was too much in February, March. The realizations will come in April, have come in April and May. So if you look at the total export performance, it has been up by about 12-13% in quantum terms. So we are more focusing on branded exports also and branded domestic also.
Okay. But when in the domestic market, when we talk about branded sales increasing, now with the imposition of 5% GST, does that have an issue as far as competition is concerned, sir?
You see,
unbranded
if you talk of the consumer pack up to 10 kg, I didn't find any dip. And as per the AC Nielsen report of 2018, I have increased my market share by 3%. Now today I am 35. Last year I was 32. And number two, I had a sale dip of 7-8% in the institutional pack, which is 25 kg, which is generally to Horeca. And naturally, they are not getting the input of the GST as per the latest laws. So there is a little bit dip of 8% in that pack of 25 kg.
So how much of my total domestic sales would be to institutional players?
Say 10 to 12%.
10 to 12%. Okay. And one last question on the financial side, sir. In terms of the inventory, we've seen that because the inventory levels have been higher, the overall working capital debt also has been higher at the year end compared to the last fiscal. So, but at the same time, our overall profitability and cash flow generation has also been higher than the previous fiscal. Then, given that our internal accruals have been higher, why has the reliance on external debt been higher? I mean, typically in the past, we've seen that with a steady increase in cash flow generation every year, our dependence on external debt has come down, even though inventory levels have remained high. But this year, we've seen that inventory is increased on one side. My internal accruals have also increased considerably, yet I have had to increase my debt levels also.
No, but you see, debt levels have increased in March only. But if you see at the finance cost, it is 69 crore, and this 69 crore includes 18 crore M2M Forex.
Okay.
So in real terms, if you see, my interest has come down from 55 crore to 51 crore. Am I right, Mr. Marutra?
Right, sir.
Okay.
But that is because the level of inventory is 2,500 crores, and today that is around how much, Mr. Marutra? March?
1,200 crores.
What was the question, sir?
What was the debt on March, working capital debt?
Working capital debt is 1,164 crore. As compared to
inventory of 2,500 crore, we have a debt of 1,164 crores.
Yeah, I am just briefing the cash flow. My total debt has increased by 163 crore. Shareholders' fund has increased by 407 crore. But my trade payable has come down. It is down by 153 crore. And my inventory has gone up by 442 crore. And there is a cash and bank balance of 65 crore also. So because of these reasons, the borrowing has not come down significantly, but the cost of borrowing is definitely lower.
So, and in the last quarter, if you compare it on a quarter-to-quarter basis, the interest expense shows a significant difference. That is because of some adjustments?
Yes, 135 in the last quarter, but there was a gain of M2M. This quarter, there is a loss of M2M.
Okay.
Am I right?
Okay.
Right, sir.
Okay. Fair enough, sir. That will be all from my side. Thank you and all the best.
Thank you. The next question is from the line of Abhishek Anand from Centrum Alternatives. Please go ahead.
Yeah, thank you for the opportunity. I just want to break up of volume data and realization in terms of exports and domestic for Q4 and FY18.
Just a second. I will just give you.
And within exports, basmati and non-basmati breakup also.
Domestic volumes for the current quarter is 87,082 metric ton. And the value is 498.13 crore. As compared to last year, it was 1,27,704 metric ton, and the value was 600.04 crore. My average realization
if you could repeat the volume.
Pardon?
Domestic full year volume, if you could just repeat, please.
Domestic full year volume, just a second.
436,376.
Last year it was 436,376 metric ton, and this year it is 312,570 metric ton. And last year value was 1,821 crore, and this year value is 1,667 crore. Average price realization in domestic has increased from 41 rupees kg to 53 rupees a kg. And for exports of basmati, full year exports is 1 lakh. Last year it was 1,25,937 metric ton. This year it is 1,49,595 metric ton. It has and in value terms, last year it was 1,006 crore. This year it is 1,207 crore. In quantity terms, we have increased by basmati rice sale has increased by 19%. In value terms, it has increased by 20%. In export of non-basmati, last year it was 27,106 metric ton. This year it is 19,245 metric ton. So this is down by around 30%. Whereas in value terms, it has increased from 75 crore to 92 crore. So there's a overall export was last year it was 1,53,043 metric ton and value 1,081 crore. And this year it is 1,68,840 metric ton and value is 1,299.91 crore.
Sure. And what is any guidance if you could share on the exports full year considering the current situation in the Middle East?
Let me tell you, as far as there are two major countries in Middle East which import around 44-45% of the total export of India, and Saudi Arabia and Iran. Now, as far as Iran is concerned, as far as our experience goes, in last 10-15 years, sanctions have been coming from time to time, but there were no sanctions on essential commodities such as rice, essential medicines, and many other items. So as far as rice is concerned, since it is a staple food, and they have to import rice, and 90%, 85% of the rice consumed in Iran is basmati rice, so it will not affect. What is going to affect in Iran, which is practically 24-25% of the total India market, is that the banking channel will become little tight in opening the LCs. That could be one effect. Otherwise, there will not be a major effect. Now, as far as Iran is concerned, that there is a three-way route of exports to Iran. One is directly to Iran, which imports around 750 to 800,000 tons. 150 to 200,000 tons goes via Dubai. And that goes via Dubai. That has nothing to do with the finance system of Iran, because that is being exported from Dubai without payment of the levy or import duty. And maybe 100,000 ton of export is being routed through Baghdad and Iraq. So total market of Iran is about a million to million, million point 0.05. That is the Iran position. As far as Saudi is concerned, now in Saudi this year they exported quite good quantities of rice, and it is continuing. And Iran, but there has been a shift in the imports of Saudi Arabia. Saudi Arabia is the only country in all of the Middle East who many a time store the rice and make to keep under aging. They import the rice in 3, 4, 5 months and keep it for a year and a half, because the money what they have doesn't pay any dividend in terms of interest, and also they put their money into the rice. One second. Into the rice. So what has happened this year, the exports to Saudi has been also good, which we believe the next year may be little down, or maybe little up, depends upon how the new crop is going to behave. As far as other countries are concerned, let me tell you something about KRBL, that today we own a share in UAE about 36% of the total market as India Gate Basmati in the top segment, against our peer at 7.7%. Same way in Qatar, we are the number 1 and number 2 brand. India Gate is number 1 brand, and our second brand, Nurja, is number 2 brand. If you look at any of the Bahrain, Lebanon, Oman, Kuwait, our shares are everywhere 20%, 19%, 24%, and if you compare our peers, they are just 50% or less than 50% in most of the countries. So as far as our branding, India Gate and our second brands are concerned, we are positioned at a very top slot.
Mm-hmm. Sure. So any number if you have which you can share on the full year number, what can likely
numbers on what?
On tonnage terms, which can likely be
that, Mr. Malhotra, just on the future or in the fiscal year?
FY19.
See, let me tell you, one thing more depends upon the rice export to Middle East. And Middle East is today about 70% of the total market, 75% of the total basmati basket, including Persian Gulf, that is Iran. Now what happens that their staple food is rice, basmati rice. And it all depends upon the pricing and the economic situation of that place. Looking at the current crude oil prices of $77, $78, their economic position is becoming better. But what is becoming a hurdle to the Middle East is the disturbance what you see in Lebanon or in many other Middle East countries. That many times disturbs the importation even of the staple food. So I am expecting that 8 to 10% increase would be every year as far as basmati rice is concerned. But we are concentrating more and more onto the branded segment. That might give us a little kick.
Sure, sir. That will be all from my side. Thank you, sir.
Thank you. The next question is from the line of Senthil Kamraj from Newbury Capital. Please go ahead.
Yeah. Good afternoon, sir. Like you mentioned, for the Iran, like 2 to 3 years back, the Indian government did a rupee transaction method with the UCO bank. So following that, we saw a substantial improvement in exports to Iran. So how do you see it going forward now?
To Iran?
Yes.
Yeah. Now, can you tell me what is your, I couldn't hear your first, what is your question?
The question is, like in 2012-13, when there was sanction issues with Iran, actually our government made a rupee transaction with the UCO bank. So following that, there was a substantial improvement in the exports to Iran. So do you see that method coming in this year also? If at all there is any more sanctions?
See, let me tell you the total importation of basmati Iran, if we take a million ton, let us say approximately 900 to a million ton, because via Dubai is a different type of a trade, then it goes to about how much, if it is, let us say 80 rupees or 70 rupees, then it is about 700 million. For a country like Iran, 700 million is not that big an amount that as far as rice people are concerned, we should be worried for a country like Iran for $700 million.
He's asking if they will be doing the business in euro, not in dollars. Every year.
So whether they do in euro or whether they do in dollar, let me tell you, whether they do it in euro or whether they do it in dollar, 99% they will do it in euro only, because for us, whether it is euro or dollar, it is no difference, but it is going to continue.
Okay, sir. And the second question is with respect to the MTM loss you mentioned. Could you quantify the loss in this year, in Q4?
Just a second. In Q4, there was an MTM loss of 13.29 crores for anything.
For the year, it was 18 crore. For the quarter, it was 13 crores.
Okay, sir. Thank you. That's it from this.
Thank you. The next question is from the line of Pranay Kurian from Ambit Investments. Please go ahead.
Hi, thanks for taking my question. I first wanted to ask you if you could share the either volume or share of your non-branded rice, total rice products. So either in value terms or in share of sales. What would that now figure be? Non-branded.
Non-branded this year is about 50,000 tons, and value is around 150 crore.
Okay, so this would, non-branded would primarily be normal rice, or?
It is basically the rejections, the Sortex rejections and other things which are sold loose. I mean, in the bags without any brand.
Okay, what about this, the tender business, the B2B institutional business, I think you had said is 10 to 12% of domestic sales, right?
Right.
And as overall, for including exports, because sometimes you have these government tender orders, right? So for this year, how much would total institutional or tender business be?
No, domestic, out of the domestic branded sale, I said 10% is sale of 25 kg bags, which is generally consumed by hotel, restaurant and institution.
Yeah.
But in the export sector, I don't think this year there was any tender. Mr. Mehrotra, was there any tender sale?
No. Ask me, there was no tender this year.
There was no tender sale in the export numbers. And in domestic, there was, I said, a dip of 8 to 10%, in that 10% due to GST.
Okay, fine. Okay, fine. So, and in the share of non-basmati, what will that total share be now? I think you gave a figure for exports, but I just want to go to the overall company level.
No, company domestic we don't do because it comes under branded only.
As of now. So
but we can give, I can ask Mr. Mehrotra to bifurcate it.
Even I'm just saying a broad percentage will be fine, percent of sales. I don't need the volumes. I'm saying roughly out of your total 100% of overall company-wide sales, what percent roughly would be non-basmati?
If you talk of domestic, it would be 3-4%. And if you talk of export, I think, kitna hoga domestic?
Exports, the 5% ke around hoga, domestic exports mila ke.
So if you talk of the total company, 5% sale would be non-basmati.
And this is in value terms?
In value terms, yeah.
Okay. And has this figure moved over time? I mean, what would this figure be in FY, say, 4 years back?
It's coming down now. In domestic, it is with the new branding, it is expected to go up. But in export, it has come down. Last year, we did 27,000 metric ton. This year, we have done 19,000 metric ton. And in domestic, we don't have the numbers. But as Anupji said, that 2-3 brands of the non-basmati has been introduced. Though the numbers as of now is not very significant, but it's expected to grow now in the next 3-4 years' time.
No, but I'm saying, suppose 3-4 years back or even 5 years back, would this figure have been something like 10% or something? Would it be a...
Yes, even as
from the beginning, we are the basmati people. Only now we have started looking because the brand has become so strong. And it is the want of the retailers and distributors that we should enter the premium segment of non-basmati. I am again repeating, premium segment of non-basmati where MRPs are 100 plus. I am entering those specialized fragrant non-basmati rice, which are the specialties of certain regions. We want to go into those varieties only.
Okay, fine. No, and I think earlier question I had asked this somewhat, but you know, there's this impact to the GST of 5%. For retailers who do not want to come under GST, I mean, I know they will have to, but are you seeing that, say, next year, do you think they'll all become, that, you know, you'll see a boost because of, you know, people again shift back to branded?
Definitely, we have seen one thing, that most of the players, the small players of basmati rice, have started not to pay GST and they have removed all their brands from the bag and they are just marketing loose bags.
Okay.
So definitely India Gate has got a chance. And I tell you, temporarily the ratio which was around 45 branded, 55 non-branded has gone to 38% branded and 62 non-branded this year because of GST. But in the times to come, I am expecting this ratio to go 50-50.
Okay.
In 2 years. So naturally, when the basket of unbranded will come to branded, the biggest benefit will go to India Gate.
Okay. And no, so what I'm trying to understand is that you're seeing a lot of the players who originally had some, say, loose brand, some package with some sort of logo on it. Now, to avoid GST, they're unpackaging it and selling it loose. So you're seeing more of a probably more market share gain for all the larger players, right?
Yes.
Okay, fine. And just another thing is, any updates on, I mean, on the, you know, the whole GI action by an MP? I know their proposal got turned down. But is there any update on that geographical?
No, the case of GI is very strong. Government is rigorously following it up. And other than the government, Punjab government and 2-3 associations from the Punjab and All India Rice Export Association, they are towards the GI and government itself. And then now that the new date is somewhere in June, I don't remember it, we are quite sure and confident that the GI will remain to the 7 states, original 7 states, that is Haryana, Punjab, Western Uttar Pradesh, New Delhi, Himachal, Uttarakhand, and 2 districts of Jammu Kashmir.
Okay.
They will remain like that. Because I tell you, the definition of basmati, when it was laid down way back in 1998, it was as the plains of snow-fed rivers of Himalayas. In MP, there is no snow-fed rivers of Himalayas. It is only in the North Indian side only. That is our definition of basmati rice.
Got it.
Yeah.
I just want your CapEx guidance for, I think, next year. I think you had on some earlier calls, you said that you're not looking at any energy CapEx because of it doesn't make sense.
Yeah, we are not looking at energy CapEx, and next year, I frankly tell you, there are so many NPAs of the rice industry. We are looking at some acquisition. We may look at some acquisition.
Okay. Okay, fine. But I'm saying in terms of any other CapEx figure for
No, not much. I mean, warehouse and little bit of 10-20 crores, I can't say, but not a bigger. Okay,
fine. So then, in general, this how exactly would an acquisition help you? Is it mainly because you're not looking at acquiring a major brand, right? It would mainly be for logistics or capacity, right?
Yeah, logistics, mainly logistics.
Okay, fine. All right, thanks for taking my question.
Thank you. The next question is from the line of Arsh Desai from Valum Capital. Please go ahead.
Hi, my question was related to how would you all expand your volume in the domestic side of the business, if I may ask?
No, how do I expand?
What are your plans to expand your volume in the domestic side of business?
You see, I started in the year 2000, now today 2017. I hold 35% market share. It is below the line, above the line, rigorous advertisements, rigorous marketing, and our quality name and the trust of the brand in people. Naturally, we are looking at a 50% market share in the next 3-4 years, 5 years. And it is not only the increasing market share, again, the point is the shift from unbranded to branded segment, so the branded basket will go bigger. And even the branded basket goes bigger and my share goes up. So both the things, it will give a good number.
Correct. And how is the response to quinoa, and what size can we achieve in the next 3 years in the quinoa segment or the chia seed segment?
Quinoa, actually, it was just we started. Now we realized we actually priced it quite high in the beginning, but now we have done it quite. So we are expecting a sale of around 120, 130 tons in India. Okay. And export also, we are expecting a good market.
Okay. And one other thing, so I believe we do an operating cash flow of around 500, 600 crore every year, and our post-tax cost of debt is around 4-5%. So why don't we look to fund our working capital more through the debt at 4-5% and use the operating cash flow for some other inorganic growth options or for some other areas that we can expand to? It just help.
Board. We are very much looking into this proposal, and you are right. We are looking into it.
Okay. And with regards to the sale of the India Gate family rice, what will be the gross margin there?
No, you see, why 92% is branded, and I'm saying EBITDA of 24. So that is my gross margin only.
Correct. All right. Okay. That's it from my side.
Thank you. The next question is from the line of Varun Goenka from Reliance Capital. Please go ahead.
Good afternoon, sir. The discussion on margin has been done before. I just wanted some more understanding on this. In 2014-15, our margin used to be anywhere between 30 to 15%. And from 17 onwards, there has been a large increase in margins. So I just wanted to understand.
Hello.
Excuse me, this is the operator, Mr. Goenka.
Hello.
Sir, just give us a second. We are checking with Mr. Goenka.
Hello.
Mr. Goenka, we can't hear you. Your voice is breaking. As there's no response, we take the next question from the line of Dhaval Balodia, an individual investor. Please go ahead.
Hello. Good afternoon, sir.
Good afternoon.
My question is, what is the plan for the next 3 to 5 years for the growth of the business? Because the last 3 or 4 quarters, most of the top line is almost flat. And the second question is, what about is there any effects the ITC is coming in the branded basmati business?
Second question is?
There is some media report regarding the ITC coming in the basmati rice business. Is there any effect on the competition or any such effect?
What is in the basmati rice business? ITC? What you say?
I think I wanting to know.
He is saying if ITC is thinking of coming into the rice business, how you see the competition with ITC?
Yeah. Will you answer, Anilji?
I am Prabhupada.
Yeah.
Let me tell you, and I think so, it's a Bible of basmati rice. The first company who started the really basmati rice from India were 2. One was Tilda, which was an English, the Gujaratis came from England, and the other was Hindustan Liver. You know the working of Hindustan Liver, and you know the working of Tilda. They were the most 2 prominent brand in 1980. After that, 5-6 more big giants came, but they came very late in early 2000. One was, even ITC had come in 2003-4 for 2 years, 3 years on trading base, but they left the business because it never suited them. Then Olam came, they did the business, it never suited them. Mr. Abhiram Seth, who was the chief executive of Pepsi Cola, he did so much work that he came out with the seed of Pepsi Cola, Pepsi seed also. But they worked for 6-7 years, 8 years on rice, and they came out. Olam, you know, is a multinational company. Pepsi is a multinational company. Then Olam lost money. Then Cargill came in 2003, 2004. They came into this business, they ran away. Presently, Adani is doing business, his market share is 7%. But I tell you, still you will find that Adani, maybe because its distribution is very strong due to oil business, but you will not, the consumer do not have that appreciation for Adani rice. Same way with Baba Ramdev, his market share is 2 or 3% he is doing on a trading base. There is one company who has recently come into this family is Ebros. They are one of the largest rice importers into Europe and America. They are just doing 60,000-70,000 tons. They are not very happy with what is happening into the basmati milling. So what I am trying to tell you, it's a very, very specialized business. It is not a business that every big professional enters and he wins the game. It has taken us to understand basmati more than 50-60 years. So this is what that we are not worried of the competition, but what we are now worried is that to reach from 10,000 ton to 200,000 ton was not that difficult. Now we have to see that from today 450,000 tons, how we have to reach in 900,000 or 1 million ton in next 7, 8, 10 years. That is the challenge before us, not the competition. How we have to increase our share and maintain our bottom line. And Anu will give more light to it.
No, it's okay. Yeah. Hello.
That's it for me. Thank you.
Thank you. The next question is from the line of Alok Kapadia from Antique Stock Broking. Please go ahead.
Hello.
Yeah.
Yeah, hi sir. Just 2 questions. So one is that can you just throw some light on both the paddy cycle and the basmati cycle? So what is the outlook in the next 6 to 12 months? And the second question, sir, is that sir, we have a 35% market share in the domestic branded basmati business. So so how big is the branded basmati business currently today?
You see, currently, I answer your second question. Currently, there's a total consumption of basmati rice into India is about 2 million tons. Out of which, according to me, 800,000 ton is branded and 1.2 million ton is unbranded. Out of 800,000 tons, 35% is my share.
Okay.
This is the size of the market. What I am expecting, this branded share of 800 should go to 1.2 million in the next 3-4 years.
Okay. Okay.
As far as the paddy cycle is concerned, paddy comes in, the cycle is from November to January. Generally, 85% of the crop comes between 1st November to 31st January every year. That is Kharif crop. And we are expecting a down of around 10 to 12% next year. The paddy prices should be low, according to our estimates.
Okay. So, sir, in that case, then the basmati prices would also then correct accordingly, right?
Definitely. There will be some correction. There will be some correction. I said I'm expecting that my average price realization will go down by 5% next year.
And we would be also planning our inventory accordingly, right, sir? So
naturally. It is an inventory management basically, because I'm holding around 500,000 ton rice I'm holding now, and price is quite low, so I'll manage. There's no problem to KRBL.
Sir, and just one last question is that, we started focusing a bit on, branded non-basmati products. So, it's just that we also trying to experiment with the market, but, on our base business, which is a branded basmati business, there's enough scope, which you highlighted multiple times in the call. Is that a correct way of thinking, sir?
Correct, but you see, non-basmati, I am not doing everything non-basmati. I am doing only aromatic, very premium non-basmati rice. Just for example, I am doing jeera rice. Jeera rice MRP is more than 100 rupees a kilo. Okay. I am doing a kolam aged rice, 1-year-old kolam rice. Okay. The MRP is 80 plus. I'm not going to do a business of 30-40 rupees where 80% of the consumption is of that rice. I cannot do that business.
Okay. Thank you very much and all the best.
Okay.
Thank you. The next question is from the line of Smith Doshi from Concept Securities. Please go ahead.
Hello, sir. My majority question is answered, but I want some more clarity about energy segment. As you already said that we are not going to pour more money in energy segment. Is my understanding is right?
Right.
Okay.
Yeah, your understanding is right.
Okay, and we are continuing that business, whatever we have done before.
Yes.
Okay, thank you, sir.
Thank you. The next question is from the line of Kashyap Zaveri from MK FinCap. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. First one data point, you mentioned about volumes for the full year. Can you help us with the volumes for the fourth quarter also?
Yeah.
You mentioned about domestic, but export, I think, you didn't share export number.
Export for the quarter or year?
For the quarter. Basmati and non-basmati.
Yeah. We did the basmati rice export of 34,651 metric ton as compared to 26,100 metric ton same period last year. So there is a 33% increase in volume in basmati rice. In value terms, we did 297.11 crore as compared to 204.03 crore. So there is a increase of 204.03 crore.
Okay.
So there is a 45% increase in value terms. Okay. Average price realization has increased from 78 rupees a kg to 85 rupees a kg. In non-basmati, we did 3,256 metric ton as compared to 17,797 metric ton same period last year. So in non-basmati volume is less because we are focusing on the value-added products this year. And the value of the non-basmati export is 17.40 crore. As compared to last year was 47 crore. So last year average price realization was 26 rupees a kg. This year it is 53 rupees a kg. So there is a significant increase in this.
Now, if I look at, sorry, sir, carry on.
Overall rice export, we did 37,908 metric ton this year, and the value is 314.51 crore as compared to 43,897 metric ton, and the value was 251.03 crore.
Right.
And the average price realization has increased from 57 rupees kg to 83 rupees kg. That's a significant jump this year.
Just one question on the export realization. Now, if I look at the numbers which are reported, on DPCS website, they share EXIM data, I can see the realizations versus last year full year seemingly have moved up by, about 8 to 10 rupees. But your export basmati realization don't show that kind of increase. Is it because, because of the branding, we don't tinker with the price too much immediately and it follows slightly like this?
I tell you frankly, as per the new NDS norms, all the marketing expense, what we are doing, we have to deduct from the top line.
Okay.
And now you see there are a lot of marketing expenses in the Middle East and everywhere, which we have to deduct from the top line. So our average realization, actually our price on the shelf is the highest, but there are some expenses also, no? It is reflected, but still I can say that our average realization price in the industry is the highest.
And what would be the price increase that we would have taken in last 12 months on, let's say, if you were to look at, SKU to SKU basis?
No, our prices of certain SKUs is quite fixed.
Okay.
I mean, if the tomorrow market goes down or market goes up, we don't change our SKU prices.
Okay. And one last question on this, FX loss of about 13.3 crores in this quarter and total 18 crores in the full year. Now, this is the mark-to-market on the closing receivables or...
Closing date of 31st March.
No, I tell you, actually, our order book is very strong. In next 2 quarters, you will find our order book this time is too strong. And as per the company policy, we don't take a risk of keeping the dollar open. That is the reason this big amount has come in this quarter, because we booked the order in February, March to a very, I cannot, it's a big order book with us. And that is the reason, because the dollar depreciated by about 3-4%. That is why this 13 crore is coming.
No, definitely the next quarter the top line will increase due to dollar. No, this 18 crore M2M is a notional loss.
But ideally we should have benefited, right? Because end to end, dollar is
up. If you are trying to say if we would have not booked the dollar, then it's a risk, no? And as per the company policy, we have to cover 70%.
So
minimum.
So when today dollar is, let's say, 66 plus, whatever number it is, so should we expect, gains on the realization side, and plus because we would have some receivables outstanding, or if we have not booked them, then probably we would find some benefits on the interest cost line item also?
Definitely 30% still not booked. In April and May, in the range of 66 to 67, we have further booked $35 million.
Sorry, I'm not able, maybe I'll take this offline. I'm not able to understand this currency thing, but thank you very much for all this.
And you can call me, I'll explain you fully.
Sure. Thank you very much, sir. That's it from my side.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yeah, sir. I just wanted to know, on the domestic side, obviously there is a drop in volume this year. You assign a part of the reason to GST and, part of the reason to Horeca sale going off. Now, with the adjustment, do you think that you will go back to your original volume which you recorded in FY17, FY19 itself? So you came down from, let's say, 4,30,000 volume to about 3,12,000 in a year. Do you think you can go back and recoup the same volume in 1 year's time?
You see, I told you that 400-something thousand ton included about 150,000 tons of a non-branded business, which has come down to 50,000 ton business. if you talk in real term, domestic sale has seen a decline of 7-8% in quantity term, and in value term it has increased. But the most important thing, despite decreasing in my volume, I have increased the market share by 3%. That is very important, and we are happy to say that our presence as far as the branded marketing is concerned is going very well. Okay. This shows that even after decrease of quantity, my market share has increased. That means due to GST, the branded segment sale has come down.
Okay. And when you were giving the figure, sir, you were giving for domestic as 3,12,000 volume and corresponding revenue figure of 1,821 crores?
No, I'm saying domestic 3,12,570 metric ton and value is 1,667.03 crore.
And the corresponding figure last year was 436?
Was 436,376 and value was 1,821.85 crore.
Can you give the same number for total rice exports?
Yes, sure. Current year is 1,68,840 metric ton and the value is 1,299.91 crore and corresponding last year volume is 153,043 metric ton, 1,53,043 metric ton and the value is 1,081.80 crore.
1,081 crores. Okay.
Yeah.
So what would be your...
excuse me, this is the operator. Mr. Cheda, may we request you to use the handset, please? Your voice is not clear.
Is it okay now?
Yes,
hello.
Sir. Thank you.
Yeah. Sir, what will be your volume and volume growth for next year? What kind of volumes would you be able to do next year?
As sir said, 10 to 15%, but I think NLG will tell better.
No, this is...
See, let me tell you as... You tell, no problem.
No, you see, it is not a forward-looking statement sort of thing, but we are expecting a growth of 10 to 15% both in the domestic as well as the export side. You see, we are concentrating on the market share. We are concentrating to increase our market share. The volume will come automatically.
Okay.
You see, the increase will be two-sided. The shift from non-branded to branded, and number two, there should be some increase of 1 or 2% in the market share also.
Okay. And last 5 months, what has been the increase in basmati prices, and have you benefited from it, or it's a lag with which it can come? So first of all, what is the rise in basmati prices in the market in the last 5 months?
You see, the paddy prices have gone in the season. It was around, it started at 30, 31. It went as high as 38. Now today it is at 34, 35. So there is I mean, say, 30 to 35, 37, then again 35. But overall market was on the higher side.
And basmati price? This was the paddy price. The rice price?
Rice is corresponding, according to the paddy.
Okay, so
there are different varieties, parboiled rice, raw rice. So talking price on the rice side is not good. Now, what type of rice? I mean,
okay.
It's better to give a paddy price. So paddy is a constant price, whether what type of rice you are making.
Okay. So this year you are ending at, let's say, inventory at 31 rupees, paddy inventory at 31 rupees.
Right.
What was the corresponding paddy inventory price last year and basmati price last year in FY17? And what is the paddy inventory price in FY18 and basmati price FY18?
Right.
Last year, just a second.
So FY17 and FY, so it gives us a fair guess on the increase in the spread. Yeah.
Very good question.
Yeah, last year, it was my opening stock was at 25 rupees a kg.
This is FY17, right?
FY17.
Yeah, opening stock was 25.
FY18 opening.
Perfect. So it becomes
FY17. You want opening stock for FY17?
Yes, sir. So that I will have the corresponding
stock for FY17 was 22 rupees a kg.
Okay.
And closing stock for FY17 was 25 rupees a kg.
Which became the opening for FY18, right?
Right.
And what is the...
5 and the closing is 31.
And what is the rice price in FY17 realization and FY18?
You want realization or you want the opening stock?
You give both. So you can give rice opening stock price and realization also, both.
Yeah. Oh. Rice opening stock price is 31 rupees a kg.
FY17 this is.
FY17.
Okay, FY18.
Opening stock is around 37 rupees a kg. 36.5 rupees a kg.
36. This for FY19, you are opening at 35?
31, 36, 42.
35 and 42.
31, 36, 42. I'm on a broad parameters.
Okay, and can you give the rice realization for 17, 18?
And if you take paddy, 22, 25, 31.
Perfect, sir. Rice realization?
Yeah. Rice realization overall I'm giving you.
Yeah, overall.
Last year it was 49 rupees a kg and this year it is 59 rupees a kg.
49 and 59.
Just a second, this is the, I'll give you the full year figure. Yeah, last year it was 49 rupees a kg, this year it is 62 rupees almost.
62.
61 rupees a kg, 61,600 rupees.
And so what is the price currently ruling if versus this realization?
You see prices in basmati, if you talk as a balance sheet number, no, it doesn't go. I'm selling certain SKUs even 140 rupees a kilo. Certain SKUs are even 50 rupees a kilo. So you can't tell what is the price of rice. That is not correct, I mean.
Okay, no problem, sir.
Different varieties, different size of rice.
Okay.
In basmati also there are different varieties of basmati.
Actually, I was trying to look at relative the same basket that you would have at 61. Is the direction-wise, is the price up or low?
Today? Yeah, price is same. Price is same.
61 ke samne 61?
No, as on date.
Okay. Thank you very much, sir.
Yeah.
Thank you. The next question is from the line of Jaspreet Singh from VA Capital. Please go ahead.
Good afternoon, everybody.
Yes.
Hello.
Yes.
Good afternoon. I just want to understand between April and October, coming October, you would generate something like sales of 2,500 crores to 3,000 crores, which would be surplus cash coming to the company. And between these 9 months, you do not have any major plans. So I just want to understand the decision of the board regarding the buyback which you commented today in the interview. Why are you not going for a buyback?
Yeah, we discussed, I told in the interview also, we discussed in the board meeting, and all the members said next board meeting we will look into it. And we are seriously looking into it, but everybody said we wait for 90 days, 120 days.
Okay, any particular reason for that?
No, there's no particular reason. It is, we discussed the matter in the board.
My real issue is that right now market might be giving an opportunity to get the stock from the market. This opportunity might not be available 90 days down the line. So why are you not utilizing the opportunity?
Yeah, we have taken your point. We'll discuss it. Yeah.
Okay. Second question is regarding the quinoa, chia, flex seeds, these 4 or 5 components which you have launched recently. So I just want to understand in the revenue terms, how much do you expect sales to be from domestic as well as from international market in this year?
Going forward, we are expecting a big sales, but this year our revenue should be 100 CR. Around 100 CR, we are looking at around 100 CR, which will give us a very good bottom line. But going forward, we are expecting a good rise in this segment. We wanted to enter into health segment, and this is just a start. We have done it. So maybe in 2-3 years, we will show the results.
Okay, but 100 crores you are expecting from domestic as well as from exports?
Yeah.
Okay, right. Thanks.
Thank you. The next question is from the line of Shruti Patel, an individual investor. Please go ahead.
Yeah. Good afternoon. My question is on tax rate. So last few years, we see the tax rate has been in the range of 23 to 24%. This year, the tax rate is around 31%. So
right.
I would like to understand why is there a change, and is this going to be new normal?
You see, we were investing in wind power, and there was an accelerated depreciation policy, and that was the main reason we were investing in the power sector. Because to take the benefit of depreciation, well, last 2-3 years we were paying 20, 21, 22. Now this year, government has withdrawn accelerated depreciation, number one. Number two, the returns in wind power are not attractive at all. So we are not able to invest the money in such things where depreciation can be availed. So going forward, I think because in ATI, whatever our top revenue of 125 crore of electricity, this is going to be tax-free for next 5, 6, 7 years. So we will be in the tax bracket of 27, 28 only. If we don't do any other depreciating investment or anything else.
Okay, thank you. And I have a couple of more questions. One is, what is the current capacity utilization of our Dhuri plant?
Dhuri is about 45%.
Okay. And the other question is, there used to be there is an item in balance sheet in last few years to be significant, around 150 crores, 3-4 years back, which has gradually come down. In 2017, it was around 12 crores. So,
what is that? Can you repeat the question? Can you repeat the question, please?
Sure. So, there was a line item in balance sheet on the liability side, which was advanced from customers.
Yeah.
Which was in the range of 150 crores up to, say, 2015. And then gradually came down to 48 and 12 crores in 2017. So, what has caused that change? And what is
people used to advance us certain time. Now the advance has come down. It's a business. It has nothing to do with...
Okay, so it has nothing to do with tender sale or anything of that?
Nothing.
Okay, thank you. That's all from my side.
Thank you. The next question is from the line of Yash Madan, an individual investor. Please go ahead.
Hello. Yeah, Mr. Mittal, there have been healthy improvement in EBITDA margin in last 2-3 years. So what further scope you see, let's say, current financial year in the next financial year? Do you see further expansion possible?
Yeah, expansion of 24% is, according to us, is quite good. I don't expect the EBITDA to go to 30%, frankly speaking. It will be in this range only, 24, 25.
So this will be maintained, basically.
Yeah, exactly.
So it means now further growth can need to be brought in terms of value or volume, basically.
Growth will come from volume.
Volume only.
Yeah. And value is market determined, but volume is where we are looking at a growth.
Right. And your this year inventory of 0.5 million ton average is at what price?
You see, there are two types of inventory. One is paddy, one is rice.
Right.
So, paddy, I have got an inventory of 31 rupees cost, and the rice, the inventory levels are 41 rupees the cost.
40 rupees. Okay, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you very much for participating in the conference. Anil, will you answer?
And there were quite interesting questions, and I believe one idea of buyback was a good idea. We are going to definitely study it. And let me tell you, as far as KRBL is concerned, we are a very, very calculative company with a very strong branding, positioning throughout the world. We are opening up new avenues. For example, we are the only company in African continent which has 100% of our own brands. So we are concentrating on brands, and we hope doing and showing better results day by day. Thank you for your questions.
Thank you.
Thank you very much, sir.